Okay, good afternoon, ladies and gentlemen. Welcome to the South African Chamber webinar series. We've been holding this webinar series over the last few months, where we're engaging with businessmen and businesswomen here in Singapore. And we've got some really good stories to tell. Our special guest today is Walter de Oude, who is the CEO and founder of Singlife. Which is one of the largest financial insurance companies here in Singapore. And we're really excited about the opportunity because we're collaborating this or aligning this interview with our Freedom Day celebrations. South Africa on the 27th of April will be celebrating the 27th Freedom Day. In 1994, South Africa became a full open democracy. So we're very proud to be a part of an interview process that will collaborate and be part of the celebration on the 27th of April when we collaborate with the High Commission and other various stakeholders from South Africa. So Walter, thank you very much for joining us and taking the time out. It's really great to have you on board. I see you got your family in the background there, which is the sign of the times. I mean, I think typically when on Freedom Day celebrations, we normally do have these in a room full of 100 people. But today we've had to do this on a Zoom call. So no problem having the kids in the background. That's the sign of the times. But just thank you very much for joining us. And maybe for those of you that don't know Walter, and particularly maybe those out of South Africa that would be listening, Walter started Singlife in 2014, and Singlife is last year completed a 2.3 billion merger with UK insurer Aviva. And it's one of the largest life insurance companies now in Singapore. Walter was also added by Business Insider to its list of one of the 10 leaders transforming finance in Asia. And the focus of Singlife, I mean, Walter, you can elaborate more, is to create a seamless and interconnected digital finance journey for its customers. So super proud to have you on board and part of the celebration and part of this webinar series. So I'll kick off with an intro question and maybe just to go back to your roots. And I mean, you are South African, you're partly South African. We've had a few chats over the past few months, and maybe you just elaborate where you're from in South Africa and a little bit about your backstory before getting into how you got to Singapore.
Sure, Jay. It's great. Thanks for the invite, firstly, and it's always nice to be a part of the South African community and to contribute to the greater good of what it is that we can do. So my background is I'm a Joburg boy. I went to school at Roosevelt High School in Roosevelt Park in Johannesburg. I went to Wits University. I'm a middle child of three, and coming out of South Africa, you do all the things that South Africans do growing up, which is ride bicycles, play rugby, play cricket, do all the fun things that you got to do and grow up like we all have very, very fond memories of. So, very, very fortunate to have come up through, decent schools and decent university. I was lucky to have a bursary to study actuarial science at Wits, and that bursary came from a company called Swiss Re. Swiss Re is a big reinsurance company globally, and I was working for them in South Africa starting in about 1995. And then, my background, as I said, I'm an actuary by profession, and I studied remotely as an actuary. And to qualify in 2000, I got married in 2000, and then in middle of 2000, we decided as a family to try and explore what life is like outside of South Africa. And Swiss Re gave me an opportunity on a secondment basis to come to Singapore and work on one of their business lines that they had here, which was on health insurance. And so that was where the journey started for me to come out of South Africa. So I came to Singapore first time in 2000, working in Swiss Re, and then progressed from there.
Okay.
But yeah.
Interesting. So actually, you just reminded me. I'm also a Joburg boy, and I think we probably played rugby against each other when we had a chat the other day. We worked it out, and it just shows you such a small world. And 20 years, 30 years later, here we are. But an amazing story. And I think 17 years. Then is that it? How many years in Singapore?
Yeah, it will be about 21 years since we got here the first time. So I worked for Swiss Re in 2000. Then I had to come back to South Africa to continue my role there. But my boss in Singapore at the time said, "Look, we actually need you to help us in Japan as well, if you could." Okay. So I said, "Okay, I'll do that." So I then went to Japan from 2001, 2002. To do work there, and then that went really well, and so they asked if I could do something similar in India for a couple of years. So then I went off to India for 2003, 2004, also with Swiss Re, doing actuarial product development and that kind of thing. And then 2005 decided actually we loved Singapore so much as a place to live. We didn't have kids at the time, and got an offer from a consulting firm, Watson Wyatt it was called at the time. Now it's called Willis Towers Watson, to go and do actuarial consulting work from Singapore for the Southeast Asia region. Did that for a couple of years from 2005. Then after a few years of doing that, you realize that actually, well, I realized that what I really like to do is build things as opposed to tell other people how to build things. So I left consulting and joined HSBC. Their insurance businesses here in Singapore in 2007. As the actuary and product guy for them, and then grew through the HSBC world to the point where by 2010, I was running all of the insurance businesses for HSBC here in Singapore as the CEO, and I did that from 2010 until about 2014.
And that's when Singlife started. Is that when? And
that's where it started. Yeah.
Entrepreneurial itch, and you got going, and you wanted to create something on your own.
That's right. So, at HSBC, I'd had an opportunity to move on to the next thing within the group, which would have been to go and run one of their businesses in Europe. And Cindy and I, at the time, had a good chat and said, well, we have this opportunity to also think about, should we try and start a new life insurance company from scratch? And at that time, the choice is either do I want to go and drive somebody else's big bus, or do I want to try and create my own? And sometimes they say that things you regret more the things in life, the things that you don't do, than the things that you do. So I thought, well, I can always get another job if the startup world doesn't pan out. So let's just give it a try and see what happens and see if we can pull it off. Which we did. So I got a group of guys together from that I'd worked with around. We had very strong relationships with the regulator here already, given the regulatory type of responsibilities that we had before. I went to the regulators and said, this is something we believe we can create better value for customers through a certain technological design around how we deliver insurance to people, basically disintermediating or making it digitally capable. And went to the regulator and said, this is what we want to do. And the regulator said, yeah, let's support us in doing that. So, starting a life insurance company from scratch was quite tough, because you have this, in all startups, normally to raise money, you have to have revenue. And we had this difficult position where we couldn't get any revenue because we didn't have a license to run the business. And we didn't have a license to run the business because we didn't have the capital to support the business. And we didn't have the capital because we didn't have any revenue. Didn't have revenue because we didn't have a license. Didn't have a license because no capital. So it was this, very difficult starting point.
Chicken and
egg thing. Yeah. That's right. So it took us about 3 years to raise the capital that we needed. We needed to raise 50 million at the start, which we did. But it took quite a long time, and mainly because the people that provided us with capital had to have faith in our ability to execute based on what we were dreaming of, rather than what we were actually putting in place at the time. And so we're very lucky with our early investors. We were fortunate enough to have the family office of Michael Spencer, the founder of ICAP from London. So he put in, took about 30% of the business at that time. And we had a Chinese investor from Credit China, fintech, which then also put in about a third of the capital that we needed, and that got us going, and that was the ticket to the races, and we've just been building the business ever since.
So that would be one of the challenges I was going to ask you. What are some of the challenges that you would have experienced in that startup phase? And it's getting the trust and the buy-in from a select group of investors. So then how did you keep them on board? How did you keep them motivated and interested to staying on board? Because I suppose that's one of the biggest risks as a startup, is that you potentially can lose those investors and they don't put more capital in. So I suppose maybe a couple of tips there. And what do you do to keep guys interested?
Keeping guys interested is relatively easy as long as you deliver on the promises that you made to them in the first place, right? The trick there is don't be overly optimistic, because if you promise the world and miss it, then it does backfire later on. But the hard part was actually getting the investors on board. We must have gone through hundreds and hundreds of different avenues to raise capital, and to get it to stick was tough. We initially started with big insurance companies. We thought, well, let's go to big insurance companies and then set ourselves up as a digital offering for a large insurance company, and then they can provide us with equity and we can then fold it back into their business later on. We found that the traditional insurance industry was very, very arrogant, and they couldn't see why they should be investing when they should be able to do it themselves. So that really didn't work. We tried almost everything, and then we went to the big private equity, and in private equity it's quite tough because you get three kinds of buckets of money. You get money that invests in ventures or greenfield. You get money that invests in financial services, and you have big buckets of money, right? And so the intersection of those three is very, very small. So it's very difficult to find someone that does VC and big bucket and financial services all at the same time. So that really, really struggled. So the combination of Michael Spencer with the fintech guys from China, that was exactly what we needed. And then the capital table then grew as the business grew. So Michael put in some more money as we grew. We then had some further changes and brought on some big investors along the way. So Aberdeen Asset Management came in. We had Aflac, which is a very large insurance company out of Japan, US, and then Sumitomo Life came in across the first 2 years of our business as we grew the thing out. And then finally culminating in the transaction that we did now with Aviva, where the consortium led by Singlife, we took in additional capital from a private equity firm TPG, and then combined the businesses now with Aviva, such that Aviva retains 25% of the complete business. But then the existing Singlife shareholders and TPG then control the other 75%. So that was a big transaction in how things go. But we were able to build the Singlife story from the capitalization of it to its delivery of a great consumer product from nothing in 2017, to value the Singlife business at about 500 million. When we did the transaction end of last year, which was a fantastic story for Singlife.
Yeah, no, I mean, that is an amazing story that you've told, and what you've been through, and to be able to do a merger with the big UK insurer like Aviva is a huge accomplishment. So well, yeah, congrats on that. And I think you touched on the about tech, and I read somewhere that you say that you fully tech, no paper financial insurance company. So is that one of the uniquenesses, and what are the other uniquenesses of Singlife that you've created, and what differentiates you from the competitor?
Yeah, so when we started the story in 2014, 2015, in this part of the world, the idea of having fully digital financial services was almost unheard of. The process for buying life insurance and owning life insurance was terribly cumbersome. So when we built the tech, when we started, we just decided that actually we don't want any paper at all. And so when you're building it from the ground up, you can design it in a way that makes sense. And so we could, we were the very first guys to be able to do the KYC validation electronically, the pure fulfillment of the transaction online. What you see as today is, like, we all just say, well, that's common sense, right? It's hygiene, it's just ordinary course. As little as 5 years ago, this stuff didn't exist, right? So we were pioneering that in the early days here in Singapore.
Yeah. No, it's amazing. I mean, I've had a look at your app. I've downloaded it, and I've heard some great things about it. So, certainly a great product that you've put out there. Maybe just to go, I mean, we'll have a lot of entrepreneurs that'll be listening in, and I think we all aspire to, whether we're in the corporate world or whatever line of business we are, we always aspire to own our own business and do our own thing. So what tip would you give to someone that's starting their own business, particularly someone in Singapore? And you mentioned earlier, like, manage expectations of your investors, but maybe something else. What single tip could you give an entrepreneur, a young budding entrepreneur that wants to, or old entrepreneur that wants to start something on their own?
Yeah, I think the most important thing ever is to just have the right support framework around you. You can't do this stuff alone, and the most important relationship in your life is your wife or your spouse. You have to absolutely have the support of your other half to do this, because it is not an easy road.
Yeah.
I remember us in the early days saying, we're going to try this for a year, see if it works. If we can put it up, that'll be great. If we can't, we'll go back to work, right? And I said it was going to take a year or so, and we'll see. But they say with entrepreneurial things, it all works in rules of three, right? They say it's going to take you 3 times longer to get started than what you thought it was going to take. And that was true. I thought it was going to take a year. It took 3 years to get going. They say you're going to work 3 times harder than you've ever worked in your entire life, right? And that's also true, because all of a sudden you are 100% responsible. You don't get days off. It's not like you get paid at the end of the month, irrespective of how hard you work. You eat what you kill, and you're working 3 times harder. The third thing they say is you're going to make 3 times less money at the end of it all than what you thought you were going to make. And that's true in most cases, but we did pretty well, though, as we do.
Yeah.
So yeah, the big tip is make sure that you've got a support framework around you that's going to get you there. The second thing is you have to absolutely believe in yourself when everybody else doesn't.
Yeah.
We were doing some stuff that was pretty crazy, and people said, "What are these guys doing? How does someone from nothing go off and compete against 100-year-old companies and take them head on?" You have to be, you have to be stupidly blindingly confident in your ability to do what you set yourself up to do, because you have to convince everybody around you that this is the right track. It's the investors, it's the staff, it's the regulators, it's the customers, it's the whole story that goes with it. You end up living, eating, breathing the stuff. You can see my background, my shirt, my life, everything is all Singlife, because this is what you become. So you have to go 100%. So that, it's the go big or go home story as well. You can't be a half an entrepreneur, I find, because you just can't juggle more than one ball at a time. So I found that I had to just give it 100% of everything, and then give it as much of a shot as you can. And then if it works, great. If it doesn't, you can say, well, I couldn't have done anything more than I did. So best tips I can give.
Yeah, no, that's great advice. And I think not easy to throw the kitchen sink at everything, as there's a saying, and so how does Walter de Oude keep balanced? How do you, when you have that determination and that drive to succeed in something like you've done, but how do you, maybe just to switch it, how do you keep a balance?
You've got to try a few things here and there.
What are
so
your,
so in the beginning it's really, really tough, because every day is like trying to stay alive. But then you start trying to put other things into your lifestyle, like I just find running to the office as often as you can, just to get a bit of exercise, and at the same time thought processes and clear your mind. I was playing rugby and golf whenever I could. Golf actually went out the window for as long as I can remember, but touch rugby on the weeknights, and get a bit of physical activity was good. And then just make time for family when you can, as best as you can, to get balance.
No, great. Well, I've heard about your touch rugby skills. Obviously, it's done wonders for your balance. That's great. Okay, just then, maybe just to reflect on 2020. I think it's been a tough year for most people, emotionally, financially. I think the economy's taken strain. And managing and being the CEO of a massive corporate company. What are some of the positive learnings and successes that you've maybe stumbled across during 2020?
Yeah, I think a lot of companies, when faced with challenges, they tend to navel gaze quite a lot and say, "Oh no, life is crap because we are subject to influences that are beyond our control." The successful ones are the ones that say, "Well, you just got to be agile and continue to navigate as you go." Right. So we were very fortunate as a Singlife company, given that we were completely digital. We didn't have to worry about advisors being online, offline, can't meet in coffee shops, can meet wherever. So we could kind of carry on unabated, and we were just in the process of launching some pretty good products. We did some cash management style of products. We've got we're now Visa issuers, all of this kind of cool stuff which had never been done before, and putting that out to the market during 2020 when a lot of people were at home consuming a lot more social media. We were able to actually flourish during the time, which we were lucky, I guess, relative to others. But I was talking to some guys. We had 50% of our workforce by about July, August last year who had all been hired during the time of COVID, right? Because we grew so quickly. So people that never met each other first face to face for a little while when people were working from home on full time. So those kinds of challenges you have to deal with, and getting through all this work from home technology, Zooming, etc. is challenge. But
it's worked in your favor.
We did okay. Yeah.
So you hear that the buzzword is pivot. How does everyone need to pivot? It sounds like COVID situation almost created a natural pivot for you. So you were able to create something unique.
Yeah. So I think we were in the process of I wouldn't say pivoting, but evolving the business anyway. We'd gone from a pure direct insurance company talking about life insurance, and we moved and evolved it into a cash management business to give you a place where you can get a better return on your cash, and then take that cash and invest it properly and combine that and bring it all back into a holistic insurance relationship, right? And that was all driven by tech evolution. It just so happened that transformation of our business, or the continuation of the growth of it, just happened during this massive time of digital change and digital acceptance, which just fueled us very well.
Yeah, that's great. So I mean, and also I think from 2020, employee wellness has become paramount for employers. So what were some of the encouraging messages that you had to give to staff to keep them motivated during these difficult times?
Yeah, it was all about connectivity and agility. What we found in our world was, because we were actually a really, really small and tight team, a lot of the work that we do is actually delivered, or the decisions that get made get delivered by people that are much closer to the actual coalface than in bigger organizations, right? So when you are empowered to get on with stuff, being the marketing person or the techie guy, you just go off and fix stuff. You can take ownership of stuff and keep going because you're responsible. You don't have to clear things through the food chain as much. The second thing we use is super collaborative tools. So email is almost dead for us. Nobody does that. You use Slack or you Confluence, or you work through collaborative tools to get things done. And that way people are totally informed all the time of what's going on. It's an open book of information. People know what's on, but you still have to have a lot of connectivity. So we did spend a lot of time in making sure that we did have team time and to get together, but and try and reduce meetings. Go through this COVID time of everybody's on Zoom calls, like it's 10 hours a day. We had to try and fix some of that to make sure that people have enough time to do work as well. It's the things you do as an organization to learn through the changes that get thrown at you.
So communication, good old communication key.
Good old communication.
So just in terms of hindsight being the perfect science, is there anything that you would have done differently through I suppose not only during COVID, but in the business and the building of the business? Was there anything that you would have done differently?
I think my personality doesn't allow me to admit that I did anything wrong along the way. You just have to kind of take everything that gets thrown at you and just make the most of it, right? So, all I can say is I drove it like I stole it. I pedaled to the metal, and I don't think I would have done anything differently from what I did, because I gave it everything I had. So, of course, you make mistakes along the way, but you can spend your time lamenting them, or you can just like ignore it and then just get on with the next thing. Yeah, of course, you make mistakes along the way. You hire the wrong people.
How you learn and how you deal with the mistakes and how you learn from the mistakes.
Yeah, or just everybody makes mistakes, right? So there's no point trying to overanalyze it. You just fix it, get on with it. Yeah.
Oh, that's great positive thought, and good to think to see that you thought back, and there's nothing you do differently. No regrets. That's
no regrets.
Great. Yeah. So I mean, I think we're coming to the end of the interview. I mean, you started your own company, created something unique. You changed the lives of millions. So what next for Walter de Oude?
Well, with the new Aviva Singlife merger, I'm now taking a role as the deputy chairman on the board. So I'm trying to divorce myself from some of the day-to-day executional stuff and actually try and get a bit of the life back and influence the business rather than drive it or operate it. Yeah. Which is great for me. It also gives me an opportunity to do a lot more stuff in the broader fintech community, build out the ecosystems, and think a lot more about the kinds of things that we should be disrupting next. Where next for the group. I'm also now doing a lot more work on our regional expansion strategy. We already have a business in the Philippines, which we started in 2019, and we're now looking around the region for what's next and how we can continue to expand the footprint out, given the strong start that we've had.
Oh, that's great. Well, I'm sure you're going to be over the headlines in the newspapers in the next coming years with the success that you've achieved with Singlife. I'm sure what you've done there will translate into new successes. And I just wanted to say thank you for your time today to be a part of. It's great having you a part of the South African community here in Singapore. And as a chamber, we're very proud of what you've done, and great to have you on board, and also to be a part of the celebration of Freedom Day. And I think 27th of April is a great day for South Africa, and thank you for being a part of that. And we wish you all the success in the future. And hopefully now you'll have a little bit more time, and we can see you on the bike trails and on the golf course.
Let's see what we can do. Thanks, Jason. Great to chat.
All right, good. Thanks, everybody, and have a great day.
Cheers.